Hey traders, Mike Sir here. Welcome to my live weekly Trader Psychology live stream series where I help you with anything with regards to the mental side of trading. So I hope you guys are having an awesome weekend so far. So today, what I want to talk about on this live stream here is basically the headline, If I Had to Do It All Again. And essentially, for many of you who know, I have been trading for over 23 years. Basically, I started my trading career in 1999, and I would ask myself this question: what would I have done differently that would have helped me with my trading, or what things that would avoid doing that would lead to a much more smoother path towards having success in trading? And ask myself, well, what are those things? So, what I want to do in this live stream is to share with you guys, if I had to do it all over again, what would I have done differently? All right, so let's get started. So, just a disclaimer in terms of trading this has not financial advice. So, if you can contact your financial advisor before making any financial trading decisions. All right, guys. So, what I've done is I've come up with 8 different things on what I would have done differently if I could do it over again. So, if I had to do it over again, if I, let's just say, was starting my trading career, what are some of the things that I would ask myself and tell myself, okay, I need to do these things in order to ensure a much more smoother path towards having success in trading. So, the first thing is get rich slow. So when I first started in my trading career, I was essentially in my 20s, and obviously I was very young, ambitious person. I was prior to that, I actually had started 3 businesses on my own, and I was an entrepreneur. I was a born entrepreneur. I never really liked working for anyone, so I was looking for a path, or essentially looking for a way to make money quickly or to get rich quick. And when I discovered trading, I essentially basically was in the right place at the right time. This was during the dot-com booms, again, when the internet was really born and became more mainstream. I found that there was an incredible opportunity to make a lot of money and to essentially get rich quick in the stock market. So I basically dived right in and I made a whole bunch of money. But that type of expectation actually hurt me in the rest of my, I guess, few years after that. Is I basically saw that, hey, yes, you can actually get rich quick, and I disregarded a lot of things that um, would have helped me in terms of my trading career. So the mentality that I had was, wow, this is an opportunity that I can get rich really, really quickly, and all I needed to do is just pour more money into it, and I would, or choose the right stocks, or essentially do whatever I could to basically try to make money as much as possible, as quickly as possible. And in fact, that actually hurt me because the reason is my mentality was, okay, this is a vehicle for me to make a lot of money just very, very quickly. I didn't really need to do a lot of foundational building, do a lot of in terms of building my skills. All I basically said to myself is, okay, yeah, I just need to go all in. I just need to be really aggressive, especially during these times with all the dot-com stocks and all the internet names and all that stuff. So I basically said to myself, okay, this is a vehicle for me to make money, so let's just go heavy and go hard. And I lost track of thinking this has, a business, or has this is something that I can do for the rest of my life. And this is where, like, I worked with many traders who come to me asking for my help. Is they're saying to me, Mike, I want to make money quickly, or I want to get rich quick, or I help me become a millionaire, tomorrow, right? Type of thing. Well, that's the wrong mentality, because trading is like in any type of profession, or in type of any type of business, it's you got to build a business, right? You got to build that foundation. Let's just say, how can you become successful in trading if you lack the knowledge, if you don't know the rules of the game, you don't know strategies, you don't know proof. You need to basically build step by step, right? Before you make $1 million, you need to make, you know, 100,000. Before you make 100,000, you need to make 10,000. Before you make 10,000, you need 1,000 or 10 or even $1, right? From the market. So you have to build that base step by step. And the reason why I say that if I had to do it over again is basically I was trying to look for a shortcut. And that's why after I didn't have success and my all the money that I made, I pretty much gave back like more than 75% of it. Is I kept looking for that next quick profit. Oh, where's that next profit? Instead of basically, okay, you know what? I actually don't really know what I'm doing. I got to build that base, right? I got to learn how to make $1. Okay, now I made $1. Now I want to make $10. Okay, now I made $10. I need to make $100, right? And so forth and so forth. So that's why, for you guys who are listening right now and watching this, is you got to build it step by step. If you actually don't look at this as a short-term, quick get rich type of thing, you will actually have more success than actually thinking of get rich quick. Because I can tell you again, I've been teaching students for over 16 years, and some of those students that I have taught, or a lot of them, basically have given up, right? Because that mentality of get rich quick, you don't get that success right away, or you don't get that success within a year. They basically, okay, you know what, next one. What's the next business that I can make money? So that's why I'm here talking to you after 23 plus years, and I'm still talking about markets. I'm still always trying to improve. I'm still trying to, continue to improve my skills, is because, I thought of this as a longer term. All right, second thing, if I had to do it over again, I would look at the quality of the trades, not the quantity of the trades. So yes, many of you guys know that I started as a day trader, and in fact, I started off as a scalper. I'm essentially looking to pull 5 cents, 10 cents, probably maximum 15, 20 cents from the markets. And at some point, sometimes I would make like 300 trades a day, right? 150 buys and then 150 sells. So yes, I was, trying to capture small, bits and pieces of the market. And obviously, at that time, there was a lot of opportunity. The market wasn't as efficient as now, but that's actually wrong. Sometimes when I look at it, is I might see a stock, trending up, right? But I'm scalping the market. I get in, right? I make a little money, and I get out. And then I see the stock that I had sold kept going higher. But I said to myself, well, I'm a scalper, right? I should be in and out, in and out. But then once you add up all those missed opportunities where you got in at a really, really good entry, and all you need to do is don't do anything. You just keep holding that stock, or keep holding that position, and you'll make more money. Versus me, like I was getting in and out, and let's just say I got in, it went up, I got out, and then went higher, and then tried to look for another opportunity to get in, and I got in, and it kept going higher, and then I got out. But if I just got in, rode it, right? If I did see obviously a trend appearing, I'm not saying you do it all the time, but if I focus more on riding some of those trends, even if I'm day trading, right? Keep in mind, I'm not talking about holding it, overnight, or holding it for a few days, or a few months type of thing. I'm just talking about intraday. Get in. If you see a trend and it's working, look to, instead of exit. And I said in some videos, look to add, right? Because the trade's working in your favor, so you keep adding to your position so that you'll make more. So the fact of in trading, it's not the number of trades that you make that will make you successful. Is actually the quality of the trades that will make you successful. Okay, third thing, if I had to do over again, I would start using a demo account first. Okay. And I know, when you first start off with trading, you learn to say you learn from myself or you learn from others. Get so excited, right? You want to try the strategy. You're watching all these videos and you want to basically utilize that strategy right away, and you use your money and then use your real money, and then you lose money, and then you're disheartened, right? You say, oh, well, the strategy didn't work, but in reality, if you actually use a demo account, test out the strategy, right? See if it's actually working in this type of market. Maybe the strategy is a good strategy, but it's just that it didn't work in the market environment. Maybe you were using a a trending strategy when the market was choppy up and down, or when the market was trending, you were basically trending up, you were basically shorting the market, right? So it's not necessarily the strategy; it's essentially maybe not even the right environment for that strategy. So if you use a demo account, right, test it out, then you would maybe have a little bit more patience, and maybe that actually strategy might actually end up working well for you. But for some people, because they're so excited, they want to make money right away, they lose money and it actually spirals down, right? I'm not sure some of you, you know, you start very, very enthusiastic, right? Say, I'm going to make millions. I'm going to be very successful as a trader. And then you don't even test out your strategy, basically dive right in and you lose money, and then obviously you're disheartened, and you lose money again and you're more disheartened, and so forth, and suddenly you get so scared of trading with your real money, just because you're afraid of losing even more, and then spiral, and then you lose a big chunk of your capital, right? So if I do over again, same thing. Use a demo account, know what you're doing, know if that strategy is working in that type of environment before you put your hard-earned money at risk. All right. Fourth thing, before I continue on, let me know some things that if you had to do over again, what would you have done differently? Okay, comment and type in the chat box, and I'll share that with everyone. All right, the fourth thing. If I had to do it over again, and this is something that I've been preaching on my channel, I've been preaching in a lot of my live streams, is focus on risk. And again, when I first started, you don't think about, how much money you're going to lose. When you first start, you don't think about, oh, where should I exit if the trade doesn't work in my favor? Or you don't think about what is going to go wrong with the trade, right? When you get an idea, you get excited, and you basically say, okay, how much money am I going to make on this trade? How successful I'm going to be with trading, how this trade is going to make me millions. This is all you think about. But as I've been preaching, is you can't control that. You don't know how much money you would make, right, from trading. You can make, there's no limit, right? But what you do know is that or what you can control is the amount of money that you could potentially lose. So that's where, when I first started, obviously I had no risk management type of strategy or any type of approach. And all I was focusing on is, how much money is this trade going to make me? Oh, this is going to go, this trade that I bought at $10 is going to go to $20, going to $40, that type of thing. But what if it didn't go up? What if it actually went down? So what I did not focus on is risk. Where am I going to get out? If I bought at 10, if it doesn't go higher, am I going to exit at $9.50? Am I going to exit $9, $8, $7, right? $6? What am I going to do right prior to? And what if it does do that? Well, what are you going to do? Right? Because if you didn't plan for the stock to go down, and the stock's, let's say, at $9 right now, you bought 10, what are you going to do? You're going to say, maybe it will go higher, and then it goes to 8. Well, I'm not selling at 8 because I could have sold at 9. Now it's at 7, right? And so forth and so forth. So that's an area that if I had to do over again, and which I am I really call myself a risk management expert now, but if I had to do it over again, first thing is to focus on risk first. All right, the fifth thing, maximize profits. I kind of alluded this to a little bit earlier, is when I'm scalping the market, when I first started, I'm making 5 cents, 10 cents, versus if I were to kind of hold on to the trade, I would probably have made 50 cents on the trade or a dollar or, et cetera, right? So maximizing profit was something that, should have been a little bit more of a focus. Is, for example, first of all, you focus on risk, right? So once your risk is protected, okay, you're not going to lose money. Your focus should be on, well, how much money can I potentially make on this trade? So there's a couple of things I'm going to talk about. Is if I had to do over again, sometimes, and again, we are emotional when we, and let me ask you guys, right? When sometimes you see a profit, you're sitting on a profit, let's just say sitting on a profit of $200, right? For example, you say, okay, well, not great, but yes, good. But you're looking, the target that you're looking for is 1,000, for example. Okay, you see 200, and then suddenly your profit's at 500. So then suddenly you get itchy, right? Because, okay, you get $500 profit. Maybe you should take it right now, because what if the stock doesn't go any higher, or what the profit evaporates? Suddenly that 500 would become less, right? And then suddenly, let's just say you see that 500 become 400. So then you start panicking. You say, "Oh, I just lost $100 of profit. Maybe I should get out, right, on the trade." And you click sell, right, and you say, "Oh, what a relief!" But then in reality, the stock actually went back up to 500, and it's, oh man, okay, that's fine, right? I just made $100 less, and then it goes to 600, and you say, okay, that's it's all right. I mean, I gave up $100, $200 profit, and then suddenly it goes to 700, and then actually reaches $1,000, which was your intended profit target in the beginning, right? What? Let me ask you guys, have those situations happen to you? Well, I can tell you it has happened many, many times, right? In my trading career, because we're focusing on the profit, right? But we're not focusing, we're not trying to maximize the profit, right? The amount of risk that you are taking, right? And you're basically getting out too early, right? You're taking your profits way too early. So many times, right? And sometimes, if you may know my rules, is of the 80-20 rule, sometimes, 80% of your profits are generated from your 20% of your trades. So if you are in a good trade, don't exit too early, right? If the trade is working in your favor, try to ride it as much as possible. And obviously, some of you guys will say and will experience is that, well, we don't know, right? As I said to you again, we can't control how much money we could make. But what you guys can do, there's a few things, is maybe use trailing stops, right? So protect yourself, move your stop, higher, so that if it does go back down, at least you lock in some profits, right? Number one. Number two is, if you are shooting for bigger profits, is to move your stop loss to break even, right? So make sure that you don't lose money. That's the only thing that you can control. Number three is just obviously just watch the market. Draw trend lines. Make sure that the price is still going in your direction. And once you start to see certain indicators or the market reversing, then you can obviously exit, right? And the fourth thing is to kind of appease some of your itchiness, is take some off the table, right? Sell maybe half of your position, maybe sell a quarter, right? So then that way, no matter what happens, you still at least make a profit, right? But I can tell you is that if your goal is to try to make a huge load of money, you have to maximize your profits, because I've worked with some students where they take profits way, way too early, but they want to make a lot of money. Well, how can you make a lot of money when every time that you take profit, you're only making $50 or $100, right? For example. Okay. All right, next one. The sixth thing that if I had to do over again, and again, this is not just 8 things, but there's so many things that I could have done better if I had to do it over again. But the sixth thing is to know your stats, and what I mean by that is to know. Well, let me just give you an example. Let's just say that you are playing sports, right? Let's just say again, I'm Canadian. I love hockey. I like playing hockey. You gotta know what your stats are, right? Know what your shooting percentage is. Knowing, what your in hockey in terms of your if you are a scorer, how many shots are you making and how much are you hitting on target? How many goals are you shooting based on the number of shots that you take, right? Etc. Etc. It's a similar type of thing in trading. Is you got to know, well, I mean, quite simply, you got to know what's the strategy that's making you all that money, right? What kind of strategy are you most of your profits from? What are the things that you're doing that are contributing to your losses? What's your win-loss ratio? What's your risk to reward ratio? What's the chart pattern that you've had a lot of success in, right? What like what's your total profit versus your dollar amount in terms of losses? Like, know your stats, so then you can adjust your trading. Like a very, very simple thing, okay, is let's just say that you got into a trade, you lost money. Second trade, you lost money again. Third trade, you lost money, right? Fourth trade, maybe you made a little bit. And fifth trade, you lost money. Sixth trade, you lost money. Seventh trade, you broke even. So what are all these losses telling you? Stop trading, right? Stop trading that same strategy let's just say you're doing the same strategy. This market's telling you you're wrong. You're not making money. So stop, right? So that's why you have to know your stats. And sometimes, we get so focused on trading that we don't look to see how our performance is doing, right? It's as simple as that, in terms of just literally, if you're losing 5 trades in a row, should you stop trading, right? Should you focus on, not, focus on not making the same mistakes over and over again, right? So that's one thing that you should be focusing on, is knowing what your stats are, knowing what your trading stats are. That way, you can adjust your trading to your performance, and know that if you're doing something that is not making you money, then adjust your strategy, right? So that's something you need to focus on, is know your stats as a trader. Therefore, you can know what you're doing right. If you know what you're doing right, keep doing it. If you know what you're doing wrong, then stop what you're doing. All right, last 2 things that I want to talk about is, if I had to do over again, stay humble. Now, when you start to have success, and it's maybe just artificial success, it's not real success. What I mean by that is you just got lucky, right? It's not because of the skills that you have, the trades that you made was because due to your trading skills or your expertise and all that type of stuff, right? So you got to know, well, what is it that you are making profits? Is it because of the skills? Is it because of the things that you had made money in the past? Those are the things that you have made profits because you did your research, you did all your due diligence? And if it isn't, then and you get really cocky, you get very, very and you brag to your friends, you brag to people, then that's not real, right? That's just fake confidence, or that's just being cocky. And I had that, right? When I first started, I had immediate success, so I thought I was the best trader in the world. I could do anything. And then when I wasn't succeeding, I had to really kind of crawl climb back out of the or leave the spotlight and basically hide, right, from people because I wasn't having success anymore. So and even if you're having success and maybe you have confidence, it's always good to stay humble because the market is can be notorious. You could be one year or one day you're like a superstar, you make a lot of money, and then the next day, if you don't um, trade properly, you could lose it all back, right? So the great thing about the markets is you have a potential to make money every single day. You have a potential if you have the skills to make a lot of money like tomorrow, right? If you have the skills, you have all those things lined up. The market agrees with you, but it doesn't necessarily mean that the next day you have the same success, right? You're having a successful year, you're having a successful 10 years or 5 years, doesn't necessarily mean that you will have success, ongoing success, right? Every single year, every single month, every single day. So that's why stay humble, right? When you're making money, you say to yourself, okay, well, yeah, the market agrees with me. Okay, good job. Okay. But then look for the next trade, right? That could make you the next profit. All right. Last thing that I want to do, and again, I want to make sure that I allow some time for questions. Okay. And again, obviously, I'm very biased here, is find a mentor. Okay. Obviously, I'm a mentor to, thousands of students, over my 16 plus years in terms of teaching my students is I cannot state this more. Obviously, again, I'm biased because I do work with my students, but if you have the resources and is to find a mentor, right? Someone that you can work with one-on-one or even in a group sessions, I can tell you that you will learn, if you find the right mentor, you will learn so much more rather than doing it trial and error. So that's why if I had to do over again, first couple of years or even when I first started, just find someone who has experience, who can tell me, hey, Mike, you should not do this type of stuff, or you should not, focus on this, or you should be careful of this, or you shouldn't, that type of thing. Then I wouldn't have to what we call pay tuition money to the markets. All right, pay tuition to markets meaning that you lose, then that's how you learn, right? So I know many of you, it can be expensive, right? It is a commitment, right? To find a mentor, especially to work with one-on-one, right? Uh, but I'm telling you guys that if you don't have a lot of experience, and I'm not even talking about knowledge here, okay? Knowledge can be learned. But if you don't have a lot of experience, is to find someone who does, who can guide you so that you don't make those mistakes that you would have made if you were trading by yourself, because that will save you so much, not just financial capital, but emotional capital, right? And some of you guys, and I personally would say to myself, like if I had a coach right in the beginning or when I was struggling in my trading career, I would have been able to turn to having success much earlier than having to struggle and have a lot of these frustrations. Because again, that's why having someone who has gone through it can help me most importantly. And again, I'm not even talking about having coaching that you have success, right? I'm not even talking about. I'm just talking about not having to endure those losses, right? Endure those challenges, or have that type of financial capital depletion due to your amateurish mistakes or just challenges that you have basically self-inflict, right? Due to your own way of thinking versus working with someone who has been there, then therefore you won't have that type of challenges. All right, guys. So we're going to open the floor to any questions that you guys have. And yeah, let me know what things that you would have done differently if you had to do it all over again. Now, I just want to have a few minutes to go through some things. So again, type your questions in the question box or the chat box, and I'll go through them. All right, guys. So Bitcoin psychology. Hi, sir. How you doing? How can we overcome greed when trades are in our favor? Well, what I say, I mean, greed is the definition is meaning that you obviously want to make a lot of money, right? You want to make more and more and more, right? So greed is not necessarily bad. Greed is only bad when everything that you, for example, put too much risk in. So, for example, let's just say a trade's working in your favor. Great. Okay. You got to know that, okay, well, at some point, the profit that you have is going to stop going up, right? Your profit, let's just say, is going from 100, 200, 300, 500, 600, 700, right? Going up. But at some point, it will go down. So when you are overcome greed, is as it goes higher, what are you comfortable saying to yourself? Okay, if I made this amount, let's just say it's at $500, and you say to yourself, okay, if I want to make sure that I make at least $200 on the trade. Okay, so if 500 actually goes down to 200, then you exit. Now it goes from 500, let's just say, to 1,000. Okay, now do you say to yourself, how much do I want to make sure that I at least make? Okay, let's just say 500. Now it's 1,000. Now it's still 2,000, right? How much money am I going to risk to try to make more? So you say 1,000. Then it goes to, let's just say, 3,000, for example, right? So you know what's the level, and then at some point, well, let's just say it goes to 5,000, and now suddenly goes to 4,000, right? Or 3,000. So what's that level that you say, okay, now it's time to take the profit, or you can take some along the way. So what I mean by greed is you can't say, okay, you go from 100, now it's 5,000. You're going to say, oh, now it's going to go 10,000. Now it's going to go to 1,000,000, right? You have to have realistic expectations. Therefore, that will ensure that greed does not overtake you. So then you won't have that blinded by greed mentality, so that you will never sell or never take that profit. So hopefully that kind of helps you. He also said that Bitcoin psychology said that if I start again, then I only manage risk and stay patient. Yes. So yeah, staying patient is actually an important skill. Again, who does not want to make money right away? And I say this all the time: is when you open a broker account, put money in, you open up your charts, and you basically can hit the buy and sell button just right away. So right, who doesn't want to make money right now? Right, press a button and make and potentially make money. But obviously, the fact is you have to stay patient, because you got to wait for the right opportunity that you are looking for. Okay, it's not about trying to predict the markets. It's about you being ready and waiting for that right opportunity, so that when you do get in, the probability of that trade going in your favor is much higher. All right, Richards, how do you deal with high spread in the market? So a couple of things. For those who don't know, what high spread is, basically the difference between the bid price and the ask price. So essentially the price between what someone's willing to buy and someone that's willing to sell, is suddenly the spread becomes very, very wide. That, let's just say, if you can buy at if you want to buy at $2, but the you want to buy at $2, but the person who's selling only wants to sell at, let's just say, $10. Okay, I'll make it very extreme. So you have like a $8 spread, right? It's very hard. So one thing is, if you're a buyer, basically put limit orders, right? Don't hit the market order and hit right at ask. Put it at increase your bid size or bid price. But I can tell you that if spreads become wide, I don't trade, because it's just way too risky. Let's just say, for example, you get in very, very quickly, okay, and the spread's really wide, okay? Now, if you sell right away, you're going to lose $8, right? And let's just say the market suddenly reverses, right? Then you immediately lose money. So when I see high spreads, I don't trade at all. All right, another comment. Bitcoin psychology. How much time required to get trading mindset? Well, depends on everyone, right? Some people uh, take much quicker or quicker in terms of, but I can tell you it's time, right? It's not something. Oh, you're going to learn this knowledge. You're going to learn this strategy. You're going to learn how to recharge. You're going to learn how to read these financial statements. It's not that. It's your mentality, right? So that's why I'm going through the stream is telling you guys some of the things that I've learned is that it doesn't impact your trading. You are building your mindset, right? For example, if you are focused on trying to be in the right frame of mind, you're very negative. Well, it takes time for you to suddenly become positive. It doesn't like a turn of a switch. So it takes time for you to know what your emotions are affecting you, right? What your mood, what your mentality, what your attitude is. So that's where it takes time for you to develop that. And I'd say, just get as much experience and document your emotions that you're feeling, feeling of fear, feeling of greed, and you start to realize that, hey, some of these things aren't affecting me that much in trading anymore because I'm well aware of these emotions, and therefore you can have some breakthroughs. Yeah. All right. So I will end the stream here, and I want to let you guys know that for next week, I'm going to talk about this type of mindset that Joins Psychology was talking about. Master your mind. I have lots of ideas and tricks, or you can say tips on how you can master your mind, because all these things, in terms of mindset, it's not something that, like I said earlier, just turn on a switch and you can, transform your mind. But there are certain ideas, there's certain things that you need to focus on to develop in order to really master, or what we say, control your mind, or have that uh, master of your emotions. And I'll talk about that in next week's live stream. All right, guys. Thank you all for spending your Sunday with me, and I will talk to you guys